The hype when we were at 30,500, people were going nuts. I even commented, I think to you in one of our interviews, that it was reminiscent of the hype that was at 69,000, the same sort of buzz. And to me, that was a negative divergence, because if you're at this lower price and you have that same level of hype, and we know what happened there, it's likely going to repeat here. And I still am in the camp that I don't necessarily believe the lows are in on Bitcoin just yet.
Hey guys, welcome back to Library of Wealth. Veteran trader Gareth Soloway analyzes the current movements of Bitcoin and what direction we'll see the crypto market in the coming days. As of the recording of this video, Bitcoin is sitting just below $27,000. Soloway points out that if Bitcoin breaks just above $30,000 in the next week and holds, then we'll see the rally into the $40,000 range immediately after. A recent report released by Standard Chartered Bank states that because of the recent banking crisis, this could be one of the driving factors that pushes Bitcoin to $100,000 this year. They believe that as the Federal Reserve nears the end of its tightening cycle, the six-figure price target is right on par with the Bitcoin halving in 2024. Soloway also discusses where the stock market is headed in the next few weeks and why the recent banking crisis is playing such a major factor. Let's get right into the interview with Gareth Soloway, as he gives his crypto and stock market prediction. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Let me just put this in perspective. If you go back to 2021, NVIDIA was up 200%. Bitcoin went from, basically 20,000 to 65, 69,000, right? Same thing with other ones, AMD or a Microsoft or all of these, they were all running together. So it was a very clear risk on trade. You are not seeing that this time in Bitcoin. And what that means to me is, so I think there's a big disconnect with actually what investors want Bitcoin to be. Is it a risk asset? Well, sometimes, like we've seen, it goes up with tech, or sometimes it goes down when tech. For instance, today, right? Today, Bitcoin is down, tech is up. On the other side, we saw a few times where the banks were collapsing and Bitcoin went up. So is it a safety asset or is it a risk asset? Which one is it? And investors can't decide. And when investors can't decide, that is not a healthy place to be in the market. So again, the biggest thing to me is this chart continues to hold underneath 30,500. You've got bearish consolidation starting on this chart. We break this 25,900 level. You're going to get a leg down probably to about 24 to 23,000, which is your next support. I mean, listen, people, there's nothing more that has a bigger cult following than crypto. And I love crypto long-term. I love specifically Bitcoin long-term. I really do think it will mature into the digital gold. I plan on holding a ton of it at the right time. But that doesn't mean, again, if you look at 2017, when we topped out there, we pulled back in that bear cycle to 3,500. And then we went back to 10,000, which was basically a triple. And then we went back and retested the lows. So, I mean, you can't say, well, it tripled back then off the lows and retested, but in this case, it's up 100%, but it's not going to go back. The logic just isn't there in that situation. So what I'm looking for, again, and this is me being defensive. Obviously, I'm net bearish on the market, so I want to be very careful. But ultimately, 3M is just one of the names that's been beaten down in this scenario. You also have, and I'm just looking at my list over here of other names here that have been beaten down. Like something that I'm looking for at least a short-term bounce on, Target. Target has had a big move down here. It's now getting into some major support. This was a former trend line. We can lower that one down to this level. I'll show you guys this level right here, right on these highs, and we're coming right into that. So again, for me, it's looking at these defensive names. Other ones would be Amgen. I think Amgen, again, is another one that's been sold. And by the way, what you see in the markets in general, and look at the move down on Amgen. I mean, this has just been, ever since the tech stocks caught fire, money has rotated from the safety plays into tech, into NVIDIA, into Microsoft, into Meta, etc. So what I'm looking for is I'm looking for a reversion to the mean trade here, where it's not like I'm in love with Amgen for the next 10 years, but for the short term, we should see some sort of bounce back up. And again, to me, I would be short big cap tech, long these defensive names like an Amgen, a 3M, and there's a few others that I'm trying to just remember which ones I like overall. I think PayPal is really intriguing to me down here. PayPal, it is getting a little bit of a bid today, the last few days, but look at this chart. If I zoom out on this chart, again, way at the lows. We haven't seen these lows since 2017 on PayPal, and it's still printing money. I mean, basically, it's trading at a forward PE of like 10, 11. Now compare that to something like Microsoft, 30 PE, Apple 30 PE forward PEs. To me, it's rotating the money where the cheapest is because you need to be defensive. Anyone who's not being defensive is opening the door to catastrophic financial loss if we do get a black swan, if we do get a recession that's worse than the Fed has said, and they don't come to the rescue. To be fair, I'm short tech right here. I mean, there's to me, this is lunacy. Doesn't mean it can't go higher. That's why I never put all in on the first buy. I kind of inch in, but I am going long on beaten down plays. And this is where the contrarian mind thinks, right? It's when you analyze human psychology and you recognize people buying Bitcoin at 69,000, not because they believed in it, but because it was the thing to do. It was the hyped up thing. You're now at that stage with these semiconductors. You're at these stages with Apple and Microsoft, where again, the fundamentals don't align. It's just kind of people jumping over each other because they think it's easy money to make. And so for me, when I go to some of these charts, I want to show you guys this. This is really cool stuff. So I bring up charts and I say, all right, well, you know what? I'm not a follower. I'm a leader, right? And being a leader in investing is important. Well, if we look at this chart on 3M, you have a chart of 3M. Look at this going back to the levels here. So 3M has been in a steep downtrend, and we all know this company's not going away. In fact, in a recession, it probably holds up one of the best. So you look at that, and then you go back, look at the support lines going back to 2007 and 2011, and even right here in 2012. That is amazing technical support. Now, again, by no means does this guarantee it's going to be a profitable trade. But again, my job is to put myself and everyone that follows me in a position where the probabilities are for an upside or a profitable trade. And right here, I would much rather be in a good name that is trading at a low valuation that's into technical support versus going and jumping on NVIDIA at these crazy levels. So the key is you have to look at it and say to yourself, what is the long-term value here? What is the reality of the situation? And when you're chasing, what you're hoping is it's the better fools, or whatever they say, the bigger fool model, right? Where you're hoping that someone else will pay higher, even though there's no valuation that makes sense, just because essentially you want to get rid of it after you jump in at a high level already. So for me, I don't want to be that. I don't want to be in that game. Why play that game when, again, it's an odds base? It's basically like going to the casino and playing a hand of blackjack. I want the odds in my favor. The way I get the odds in my favor is simply by finding good charts, discounted quality names into technical levels. I'm glad to be in these safer names. I don't need the adrenaline rush in my life anymore of maybe I make a lot of money overnight. No, a slow and steady, and I've done this, and I'll tell everyone out this. In my early career, I was just like everyone else. Put all your money in, try to double it overnight. And you know what? I blew up my account countless times. So now I've found that if I do the right thing and just stay slow and steady, it really does win the race.
Soloway suggests that during times of crisis in the banking sector, such as the current US and European banking crises, money may rotate into Bitcoin, leading to an increase in Bitcoin dominance. Soloway advises new traders to avoid the mentality of making $1 million overnight or by the end of the year, as it can lead to massive losses and even bankruptcy. He believes that hitting singles and doubles consistently is the key to becoming a successful investor and building financial wealth long-term. Soloway does predict that the markets will go lower due to the Federal Reserve's decision to keep interest rates up until 2024. He advises short rallies into resistance, as this is still a bear market in Bitcoin until it remains above $30,000. What do you think about Gareth Soloway's market prediction for the coming weeks? And where do you see Bitcoin's trajectory by the end of the month? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.